Hi, Shae Russell here from ABC Bullion, and joining me today is Nick Frappell, Global General Manager of ABC Bullion. Nick, how are you, mate?
Very well, thank you, Shae. Very well, thank you.
Now, we have no shortage of topics to cover today, but we do have a hard time limit. So we are going to try and whip through things as quickly as possible. First and foremost, we're going to start with probably one of the most topical ones going around, not just the markets at the moment, but Twitter and forum, and that is Evergrande. Now, if we take a look at the gold price, with the gold price currently sitting at 1,760-ish US dollars per ounce at the time of making this video, Evergrande is everywhere in the news, but gold doesn't really seem to be reacting to this. Can you kick off today with your thoughts on, first of all, what Evergrande actually is? I'm going to throw that one over to you, but also to why gold isn't really reacting to a potential Chinese banking crisis.
Well, Evergrande is, as you say, is on sort of social media and the news everywhere. So probably some of what I'm going to say is being said elsewhere. But Evergrande is obviously, it's the second largest Chinese property company. It's a pretty enormous company. I think it's got something like 800 property projects in the pipeline, and it's a massive supplier of apartment units to middle income and upper middle income mainland Chinese. The issue is that it has about 2.1 trillion yuan of debt, which is about, I think, 330 billion US dollars off the top of my head. And it is not expected, or it looks highly likely that it will struggle to make its coupon repayments. It's got a huge amount of debt falling due soon and over the course of the coming year. And as we know, the bond prices of Evergrande and share price has absolutely cratered. And the big question is that a systemic risk to the Chinese banking sector? The short answer that we're getting is that most banks, Western banks, if you like, and non-Chinese banks, are saying that it's not. The reason why they're saying that is because if you look at how much major Chinese banks have lent to Evergrande as a proportion of their tier one capital and their overall asset book, that it's not really that large. It's pretty large for a couple of them. It's certainly large for China Minsheng Bank, but it's not that large. And if you look at it by that metric, it's not sort of super scary. However, things that are systemic have a way of turning up in perhaps different ways or unexpected ways to the sort of maybe the black and white metrics. And there are so many people involved in terms of people who've bought, who are employed by Evergrande suppliers, both upstream and downstream, people who are waiting on properties that they've put down payments on. There's potential for it to be, a big social issue and one with ramifications well beyond the banks, even if they can sort of just absorb a hit. So it is a big problem. It's not easy to see how big a problem it is, but the sort of the narrative at the moment is that, hey, this shouldn't be seen as systemic. I think the jury is out. No one wants to say, hey, it's not a problem. It is a problem. It's just that it's a problem that might manifest itself in ways and that are not actually going to mirror big systemic problems in the past. As to why gold isn't reacting, one reason why gold isn't reacting is because we've seen a really nice upward movement in the dollar index. That's acted to cap gold. We did see a big shooting star in the daily candles yesterday for the dollar index. And I think what that tells you is that immediate move upwards has been sharply rejected. But I still think the dollar has got, or risk off assets generally should be favored this week. Thing is, the Chinese, mainland China is still closed for national holidays. I think they come back tomorrow. So that's kind of insulating us from a little bit from the news. And what's happening is that the Hong Kong Stock Exchange, the Hang Seng, has been a real proxy for all of the bad news that's coming out of all the speculation that's coming out of the Evergrande problem.
Now, before we move on, I know, you are a precious metals expert, not an Asian markets expert, but I am just going to try and drill down into one thing.
Right.
There's a lot of comparisons in financial news headlines right now comparing the Evergrande's problems to a Lehman Brothers moment. Now,
Yes.
is that a lazy comparison? Are we just trying to look for the nearest financial crisis to cast our mind back to? So, I guess my question to you is, are these the same beasts, or are they two completely different things?
I think they're different enough, for sure. And one of the things about the Lehman Brothers moment is that I guess everything hung on whether the Fed would rescue them or broker a rescue, backstop them. And it was the shock of them not being backstopped that was the essence, I guess, of the Lehman Brothers moment, if my recollection is correct anyway. This is a slightly different story because this is, by comparison, happening perhaps in slow motion, or so far it's happening in slow motion. I don't think that the observers are thinking, well, if, say, the Chinese government, the PBOC, whoever, doesn't backstop these guys, then it's automatically a disaster. Far from it. I think that quite a few people would say they won't necessarily be supported. Some people think they will be, but if they're not backstopped, then it's quite possible that the resolution process, that if should it get to that, we're talking about things that haven't happened yet. That's probably the most important, one of the most important things to say. But should there be a resolution process, then the resolution process itself is probably quite manageable with or without the support of say, the PBOC, for example. Well, the PBOC shouldn't go in and rescue property companies, go and sort out banks, which they may have to do. But what I'm talking about is essentially state-sponsored support. Even if there is very limited state-sponsored support, the mechanisms for resolving and sort of dividing up the problems with Evergrande, if that didn't happen, I don't think that people would fall over in shock. There might be another shock. There might be another problem that's sort of, baked into the system that we can't recognize yet. That'll be the problem. If there's something, it's always the thing that you don't expect that's going to be the big issue. But I do think, there is a risk of being a slightly lazy, or like Lehman Brothers being a kind of a portmanteau word for big problems. They're not all the same.
No, they're not. History doesn't rhyme, but sorry, what's that saying? History doesn't repeat, but it does rhyme. There we go.
Yeah, exactly. Yeah.
All right, I'm going to move forward and try and do it a little bit more articulately than I just did. Now, the London Bullion Markets Association, an annual conference was held last night. You and I were fortunate, it was held digitally, I should say. We were fortunate to take part quite late in the evening last night. Now, they kicked off the event with their macroeconomic analysis. Now, tell me, what were your key takeaways from that 1 hour round panel?
I think one thing was that the real importance to all of the panelists that the Fed and other central banks don't lose sight of anchoring inflation expectations. So they fully expected inflation to rise to some degree. They weren't necessarily hugely negative or hugely pessimistic, if you like, about inflation outcomes. But I think one thing that they really expected, that was really important for the Fed to get right, and I'll use the Fed as to cover all major central banks here, that they don't lose sight of the anchoring of inflation expectations. Because if you can anchor expectations over the medium to long term, you've still got things under control, and you can manage expectations, and also the monetary policy, if you like, that goes with it. And hopefully, as one of the panelists mentioned, the politics that go with inflation, because as one of them put it very well, hopefully won't misquote him, but inflation is the outcome of a sort of breakdown between the negotiations between the interests of creditors and the interests of debtors. which I thought was, he put it much better than that. But I think if you remember at the time you were listening in and you thought it was a pretty neat way of encapsulating the argument. That's one thing. The other thing is that there was a bit of a talk around crypto relative to gold. The panelists were, without being overly partial about it, cited gold's really long history as an asset, and how it's widely understood, and how it also has many other use cases beyond the medium of exchange, the savings kind of case for gold. It's also, it's got multiple use cases, and so they were rather friendlier, I think, to gold for all of those natural reasons than they were to crypto in general.
Now, I did agree with you last night that the way that gentleman had described the inflation tussle, I thought that was very articulate. And I loved it. Now, we are rapidly running out of minutes and time today. So we do need to touch on a little bit on the Aussie dollar, as we are Australians. Yes. Well, you're an honorary Australian these days.
Passport.
Exactly. Now, the Aussie dollar is getting kicked around, for lack of a better word. I mean, in the past 3 weeks alone, it's down 2.7%. Again, at the time of making this video, it's sitting at 72. What's my little chart say? 72.77 US cents. And, it's coming off a recent high of 74.5 cents only 3 weeks ago. So, let's run your technical lens over what the Aussie dollar is doing, and why we've seen this sharp upswing followed by arguably a sharp decline.
Yeah, look, I think that, on the domestic front, lockdowns have continued to be an issue. So that's perhaps part of the dollar negative, Aussie dollar negative story. China, obviously, and with the whole Evergrande issue, is a negative as well. We've seen a really significant drop in iron ore. I've got the front month SCOA contract, iron ore contract, printing 92.60 here. That has serious ramifications for government finances and GDP in Australia. If Evergrande was to have a sort of a really disorderly outcome, then one of the banks we were talking to today, and they did stress that this was a kind of like a bad outcome, a worst case scenario, or a worser case scenario. We're talking of a couple of percent GDP in China being knocked off China's growth. That would obviously impact Australia. We had a bit of a recovery, partly because I think the Aussie dollar descended quite close to sort of interim technical supports. The market was really short. Short covering in the non-commercials took place pretty aggressively, profit taking, I think, to the large extent. But what was quite interesting is I think that as the non-com shorts bought back, the non-com longs diminished pretty heftily, and they were quite happy to give their longs, which were probably looking fairly underwater if I think about the volume weighted average they bought at. They were quite happy to give their longs to the short coverers, and I guess that probably worked out quite well, because the mood music around the Aussie dollar hasn't really changed, and now we're descending again. We've got targets back to the former lows. And given the sort of the bad news, if you like, around our biggest trading partner, it doesn't really, and like the huge effect we've seen, iron ore halving and so on, it doesn't really surprise me that the Aussie dollar is on the defensive. But again, not the similar thing. The last conversation we had about this, or the last video call we had about this, the people are quite short the Aussie dollar, so any good news, and you could see a pretty swift rally.
I'm going to add mood music to some of my favorite sayings coming out of you. Now, one of my other favorite sayings I do love from you is a point of pain. So could you tell me that the longs in the Aussie dollar were at a point of pain?
Yes, I'll say point of pain. Yes, I believe they were, just looking at where the VWAP was, where they entered, and where the shorts, the long com shorts entered. Non-com shorts were definitely looking to take profit. Certainly in aggregate, the longs were not.
One day we will put together a video full of my favorite sayings of yours on how to talk about the market. All right. That's unfortunately all we've got time for today. Nick, once again, thank you for joining me. And I'm very glad that you and I found different shirts to wear for this video.
Absolutely. Thanks very much, Shae. Appreciate it.
Thanks, Nick. Bye.
Bye.